In today's video, we'll dive into the world of Domino's pizza stock, its recent performance, and the potential for investors. We'll be discussing the company's trajectory of distribution growth, the impact of their latest financial results, and what the analysts are saying about the future. Let's dive in. Well, today we have some great insights on Domino's pizza stock. While it may not be a high-yielding stock, the real story here is the remarkable trajectory of its distribution growth. So let's dive into the details of that. Thomas, in your recent article on MarketBeat titled Domino's Pizza Delivers an Attractive Entry for Income Investors, you had mentioned that Domino's has already increased the dividend payment for 11 years, which really puts them on par with Dividend Achievers and future Dividend Aristocrats. So tell us more. What is the secret behind Domino's impressive distribution growth, despite not being a high-yielding stock?
Yeah, right. So this isn't a high yielding stock. The yield is okay. It's on par with the S&P 500, maybe a little bit lower, but this is a dividend growth story and not a high yield story. So the detail is that the company pays a small amount of its earnings. It could pay more, but chooses not to. It's leaning into growth. Money is used to invest in future cash flow, which will help sustain dividend growth over the long term. So right now they're paying about 35% of earnings. That suggests a long trajectory for dividend increases without earnings growth. Earnings growth and a solid balance sheet mean they can sustain a high double-digit pace of distribution increases, which is a real attractive draw for investors.
All right, so I want to chat about Domino's recent Q3 performance, of course. Total revenue has declined year over year. So share with us, what are the factors that could have caused that, and maybe also the market-specific conditions that kind of are going to offset this weakness?
Right. So the three factors that really played into the revenue decline was a small, very mild decline in U.S. comps, about 0.5%, compared to like a significant double-digit growth over the last 2 to 3 years. A little bit of give backs, not bad. Also market basket pricing. The market basket is the groceries they sell to their stores. So they charge less to their stores, made less revenue that way. But then another factor was exiting Russia because of the war in Ukraine. That impacted revenue significantly. But ex-Russia, the company's growing, and that's awesome.
Can you tell us a little bit more about the international growth? So what has contributed to that, and how is that expected to continue to grow?
So the pandemic kind of slowed down the growth trajectory a little bit, but based on the company's guidance and targets, they're looking for 25% store count growth over the next few years. A lot of that growth is going to be in international and emerging markets, which is significant because in 2024 specifically, emerging markets are expected to more than double the US GDP growth. And within that, restaurants and digital will also outpace. So that puts Domino's in a pretty good position over the next year as far as its growth outlook.
So analysts and institutions are ordering up some Domino's pizza. Thomas, that doesn't sound like too bad of a choice to me, but give us some more details on that. Why are they favoring this stock?
Well, I think they favor it for the growth and the capital returns. The company is growing and it's on track to continue growing. It pays a solid dividend. It's got a robust trajectory for dividend growth. As far as the analysts go, there's 24 covering it. That's a significantly high number. They rated a moderate buy. There's been some mixed activity, but the consensus rating is firm and the price target is moving higher. They see about 15% upside at the midpoint of the range, which is it's pretty decent given the dividend and the dividend growth. Over the long term, I think that consensus target will move higher and provide much greater than 15% return. And then as far as the institutions go, they're also buying the stock. Institutions represent the bulk of investor money or investable money in the market. So when they're buying, stock prices may fall, but they won't fall too far.
All right, Thomas, on to the technical outlook here. You're telling us that Domino's is pulling back to critical support. The bottom is in. What else can you share with us?
All right, let's pull the chart up and we'll check it out. Okay, Lacey, so you can see over here that the post-release action has been a little bit mixed. The stock price corrected, it bounced. There's still some resistance up here at these moving averages, but we're also clearly above this critical support line. The 325 level has been support for this stock for many years. It's been tested 1, 2, 3, 4, 5 times. It's likely going to confirm that support a 6th time, And when it does, I think that will be the opportune time for investors to get into the stock.
Well, Thomas, that's a wrap on our deep dive into Domino stock. We've unfolded the story here behind their recent financial performance, the growth trajectory, and the opportunities that lie ahead for them. Don't forget to subscribe for more insightful market analysis and, of course, stock updates. We're here to help you keep informed throughout your investment journey. So we encourage you to check out the resources linked down below. Also, please leave us a comment with your thoughts on this video and, of course, any questions that you may have. And we look forward to chatting with you soon. Thanks, Thomas.